The Your Credit Matters segment today being brought to you by CreditSanitizer.com. You have a credit report and it's wrong. Visit Credit Sanitizer for a free audit of your credit report. And our education portion this morning, what is a credit score? A credit score tells lenders about your credit worthiness, how likely you are to pay back a loan based on your credit history. Calculated using the information in your credit reports, FICO scores are the standard for credit scores used by 90% of top lenders. Credit scores influence the credit that's available to a person and the terms, the interest rate, etc., that lenders may offer. It's a vital part of credit health. When you apply for credit, whether for a credit card, an auto loan, or mortgage, lenders want to know what risk they take by loaning money. When lenders order a credit report, they can also request a credit score that's based on the information in the report. Credit score helps lenders evaluate a credit report. It is a number that summarizes credit risk based on a snapshot of a credit report at a particular point in time. Important to understand that not every score offered for sale online is a FICO score. You need to learn the difference between credit scores and FICO scores. And be aware, the scores are not saved anywhere. So a score is actually generated the minute you or somebody else requests the score. So if you wait 10 minutes and pull it again, likelihood is it'll be different. So got to understand that part of it as well. Most widely used credit scores are FICO scores. The credit scores created by easy for me to say, Fair Isaac Corporation. 90% of top lenders use FICO scores to help them make billions of credit-related decisions every year. FICO scores are calculated based only on information in a consumer's credit report maintained by the credit bureaus, Experian, Equifax, and TransUnion. By comparing this information to patterns in hundreds of thousands of past credit reports, FICO scores estimate your level of future credit risk and how likely you are to repay a loan. What is a good credit score? Most credit scores have a 300 to 850 score range. The higher the score, the lower the risk to lenders. A good credit score is considered to be in the 670 to 739 range. Less than 580, that's poor. This credit score is well below the average score of U.S. consumers and demonstrates to lenders that the borrower may be a risk. 580 to 669 is fair. This credit score is below the average score of U.S. consumers, though many lenders will approve loans with this score. 670 to 739 is good. This credit score is near or slightly above the average of U.S. consumers, and most lenders consider this a good score. 740 to 799 is very good. This credit score is above the average of U.S. consumers and demonstrates to lenders that the borrower is very dependable. And 800 plus, this is exceptional. This credit score is well above the average score of U.S. consumers and clearly demonstrates to lenders that the borrower is an exceptionally low risk. While many lenders use credit scores like FICO scores to help them make lending decisions, each lender has its own strategy, including the level of risk it finds acceptable. There is no single quote-unquote cutoff score used by all lenders, and there are many additional factors that lenders may use to determine your actual interest rate. When a credit score is calculated, the credit bureau will also provide up to 5 reasons that are most heavily influencing that particular score. You need to know what's in your report. The minimum required to calculate a credit score, for a credit score to be calculated, your credit report must contain enough information and enough recent information on which to base a credit score. Generally, that means you must have at least one account that has been open for 6 months or longer, and at least one account that has been reported to the credit bureau within the past 6 months. What are the minimum requirements to have a FICO score? Different scores at each credit bureau. Because each credit bureau could have different information on file about you, your scores will most likely differ for each of the 3 credit bureaus, Equifax, TransUnion, and Experian. Sometimes the difference is just a few points. Other times the difference in your credit scores from each bureau can be vast due to an error or mistake in your credit report. Surprise, surprise. These differences can cost you thousands over the life of a loan. Be sure to check your reports regularly or sign up for alerts to be notified when your score changes. As the information in your credit report changes, so will any new credit score based on your credit report. Your credit scores from a month ago are probably not the same score a lender would get from the credit bureau today. Other credit scores or FICO scores, yeah, there are some of the others. I call them FICO scores. While FICO scores are used 90% of top lenders, there are other credit scores made available to consumers. Other credit scores may evaluate your credit report differently than FICO scores. When purchasing a credit score for yourself, most experts recommend getting a FICO score, again, as FICO scores are used in 90% of the lending decisions. That is the Your Credit Matters segment, brought to you by creditsanitizer.com. You have a credit report. I promise you it's wrong. I've been looking at credit reports for the better part of 3 decades. The best score I've ever seen is an 834.
Wow.
And I've never, ever, ever, did I say ever, seen a credit report that's completely accurate? Never. Even the 834, I saw errors on that report. So do you think yours is accurate? I'm just throwing that out there.